Our next guest has been negative. Jonathan Krinsky, the chief market technician at BTIG. Why is he on right now? Because he just dropped a note a little while ago that he sent to us that says a bounce is overdue. But how high can it go? That's the question you ask. What's the answer?
Yes, Scott. So we think we're at a time where, let's take a step back. So since February, we've been looking for, moved sub 44,000 the S&P. We got to 3860 a couple days ago, but it was never about the absolute level. It was more about, what is the price action telling you when you're at that level? And today, still early, but as of a little while ago, we had more than 90% of NYSE volume was in advancing stocks. Now, if you recall, we'd been looking for 90% downside days as kind of signs of selling exhaustion or capitulation. We got a few of those in the last week or so, and now we have the opposite, right? We have a huge surge in demand. It would be the first 90% advancing volume day since June of 2020. So it's a pretty rare occurrence. And so we think, despite the fact that we didn't get that final washout, we didn't get the VIX curve inversion, we did get enough evidence that there was some exhaustion, and today's action kind of confirms that. So we think, it's reasonable to expect to move back up to 4,200. That would be about
5%
in line with the movies. Well, it'd be about from low to high. It would be about in line with the move we saw off the January lows, and it would get you back to that 4,200 level, which, by the way, was a huge support violation on the way down. We think it probably is going to act as resistance on the way up.
Now, I mean, just the other day, you were fairly negative on the market. You thought it would go lower, and maybe then now you point to yesterday as perhaps that low that gets you to technically at least change your opinion on where we can go, at least in the short term?
Yeah, I mean, look, there's a number of indicators that over time are pretty consistent with market bottoms. And what we got this week, we got some of them to check the box, right? And some of them didn't. You guys are talking about the VIX. We did not get a VIX curve inversion like we typically see at market bottoms. We did get the percentage of stocks above the 200-day on the Russell 3000, which again is 98% of all stocks. We got that down to about 16%, which again, we're in the ballpark. And so it's never an exact science. Ultimately, do we think, the low yesterday is the low for the year or the low for this move? Probably not. But I think given the carnage under the surface, at some point, look, we've already seen, we saw a 9% rally off the lows in January, 12% off the lows in March. None of those led to a bottom, right? So I don't know how you can say that this move will be the bottom, but I certainly think we're at a point in time where, we're well overdue for that, 8, 9, 10, even 12% relief rally.
But you got to hold you got to have the things fall into place, right? It's nice to say at 11:40 whatever when you put out the note that as of that moment you had better than 90% up volume. You need to finish today at that same level at minimum to confirm this. Am I right?
Yeah, I mean, but look, again, there's two parts of it. There's today's action, which again is not finished, but there's also everything we just said that's happened over the last few days and the last couple of weeks. And so, sure, if we were to roll over and close down on the day, would that still mean we're going back to 4,200 imminently? Probably not. But I think those other things that we look for still do stand, and they suggest, again, we're in the ballpark of that kind of short-term low, whether it was yesterday or a little bit lower, we're getting close. But again, if you guys were talking about nobody's calling for the resumption of the bull market new highs, I think that's fair to say, given the carnage under the surface. At a minimum, price levels aside, time is a component that needs to work too. We're just, we're 4 months off the highs of the S&P 500. It's still pretty relatively new as far as bear markets go from a time perspective.
I hear you. All right, Jonathan Krinsky, I appreciate it so much. Interesting note, and I'm glad you came on to talk about it.